Scores different from what you might find online? I'm going to answer that in this video and tell you where you can find them. Coming up right now. What's happening, everybody? I'm Huddy, and I'm going to answer that question. Are mortgage credit scores different than what you might find online or what your bank gives you? The simple answer is yes. They are in fact different, but it's a little bit more complicated than a simple yes or no question. The thing we have to understand is, what are they, where do they come from, and who created them? The company that 90% of all lenders use when pulling credit to determine if you're going to be able to qualify for a mortgage was created by a company called FICO. F-I-C-O, FICO. Now you may have heard of that, but what you might not know is that this was a company created in 1959 by a couple guys, Fair, who's an engineer, and Isaac, who's a mathematician. A brief history of where FICO came from, well, it goes back all the way to 1956. An engineer by the last name of Fair and a mathematician by the last name of Isaac created this way to evaluate risk. But it wasn't until 1989 when it was first introduced to banks. So it hasn't been around in banks as far as a scoring module goes for that long. But since it came out, it's had a few evolutions. So right now in the mortgage world, I call it the mortgage algorithm. That's kind of a street term I give it to give you a basic understanding, or FICO Classic, if you will. There's also FICO 8 and FICO 9 now available. Now these are way different than what you might find online with other resources that you're using to monitor your credit. In the world of FICO, especially when it comes to mortgage lending, we're going to pull from all three credit bureaus, Experian, Equifax, and TransUnion. Each bureau is going to give us a FICO credit score, a FICO Classic, or a FICO mortgage score, which is different than FICO 8 or FICO 9. Those two algorithms, FICO 8 and FICO 9, that's what you're going to be able to find if you go directly to one of the bureaus. Like if you go to Experian.com, you can get a FICO 8. You have to pay for it, but you can get FICO 8, which is primarily used when you're buying a car or a lot of credit cards. FICO 9 is relatively new, and that's used in some banks and credit cards as well. It just depends on what model they want to use. So that's a question you could ask. FICO Classic, or the mortgage algorithm, evaluates scores a little bit differently compared to FICO 8 or FICO 9. The main difference is looking at credit card balances. In the FICO 8 world, if you have 3 credit cards, each with a $1,000 limit, let's say one's maxed out and one's at 50% utilization and one has zero balance, they're going to add them all up and they're going to show that you have a 50% utilization, which helps your score. In my world, the mortgage world, we're going to look at each credit card individually. So if you have a credit card that's maxed out, that could cost you around 20 to 30 points depending on how the rest of your credit looks. The other thing that we want to talk about is the scoring range. FICO goes between 300 and 850. And a lot of people are worried because they're looking online and they're not sure what scores to really trust when they're trying to buy a home, or they might feel they need a 700 credit score in order to qualify for a mortgage, which is not true. You can, depending on who you're using as a lender, you could qualify for a loan at a 580 credit score. I know because I've done them for people. The thing that you want to be careful of, though, is where you're actually looking at your credit score. A lot of those online resources that are free are using what's called Vantage. Vantage is a scoring algorithm that was created by the bureaus in order to compete with FICO. But now we know that 90% of all lenders use FICO. So where do we get those, and how do we know we can trust it? Well, the best resource if you're not ready to talk to a lender is myfico.com. I'll post a link to that below in the comments. The other place, well, talk to a lender. That's a good way to get your score, know where your debts are, what your debt to income is, and just learn about the home buying process. Because when you're applying for a mortgage, people get freaked out by inquiries. And they think that it's going to cost them 10 points, which is not true. When FICO sees a mortgage credit inquiry, they deem that as a good debt, and you're trying to do something to better your family. So truthfully, it's probably going to ding you 2 to 3 points. And not only that, if you're shopping lenders, You can have your mortgage credit pulled as many times as you want. I mean, don't go crazy, but within a 14-day time period, and it's only going to count against you as one credit pull, one inquiry. So it's only going to cost you that 3 points the one time, even if you shop and talk to a few different lenders. So if you have questions, feel free to drop a comment. If you want more videos like this, make sure you subscribe so you can get those alerts. Thanks for checking out the video. We'll see you at the next one.